Well, good morning, friends. Today we are taking up an interesting topic, that is hull insurance. Hull insurance. Ship owners resort to marine insurance for protection of their ships, freights, disbursements, and other interests against marine perils. Now, heavy capital values are locked up in ships, the loss of which could prove financially crippling to the strongest steamer companies. So, hull insurance refers to the insurance of hull and machineries and other interests known as subsidiary interests of ocean going vessels, fishing vessels, sailing vessels, travelers, barges, etc. Subsidiary interests are generally freight and disbursements. So, hull insurance for vessels when they are under construction are called construction or builder's risk. The constructions or builder risk insurance. Also, there are certain special type of hull covers like charterer's liability risk, ship repairer's liability risk, etc. In recent development of hull insurance is insurance of oil drilling rigs and offshore oil platforms as well as allied construction risks. So vessels are broadly categorized into two groups. First, mechanically self-propelled vessels of steel construction classed with Lloyd's registered or shipping or any other internationally recognized classification society, including Indian Register of Shippings. So these vessels may be liners or tramps carrying cargo and or passengers employed in home or foreign trade. Secondly, smaller crafts, generally of local origin, built of steel, wood or fiberglass, which are not subject to classification. Normally, such crafts are used in inland waters, coastal parts of or within port areas. So, earlier, GIC in consultation with TSC introduced a scheme necessitating classification of coastal crafts like barge, trawlers, and tugs by IRS, and certain incentives in rating were offered for such vessels, so classified by IRS. So acceptance of these risks was governed by hull tariff that time. Now for hull insurance, proposal form is used, of course. A duly completed proposal form is invariably obtained from the ship owner. There are three types of proposal forms. Proposal form for sundry hulls like fishing vessel, sailing vessel, draggers, inland vessel, etc. Form in respect of vessels for which rating is to be done by TSC, for example, ocean going cargo, passenger based vessels. But now this rating is done by the insurers themselves. And third one is specialized proposal form, that is builders risk insurance, ship repairers, liability covers, etc. So the proposal form elicits information in respect of the few things like technical details of the vessel, type of vessel, for example, tanker, general cargo, dry bulk, dredger, passenger liner, container vessel, fishing vessel, trawler, etc. Construction of the vessel: steel, wood, composite or fiberglass. Name of the builders and place built. Age of vessel: year built. Tonnage: GRT or DWT. GRT means gross registered tonnage. GRT is the volume of the interior of the vessels, including all spaces which are permanently closed in, but excluding the double bottom, expressed in tons of 100 cubic feet. And DWT means dead weight tonnage. Dead weight means the capacity in tons of the cargo required to load a ship to her load line level. So the dimensions to verify the tonnage information, that is length, breadth, draught, etc. Whether the vessel is equipped with the twin screws, double bottom and collision bulkhead. Method of propulsion and particulars of engine, machinery, main auxiliary or refrigerating, and particulars of fire extinguishing equipments. Other details of vessels like valuation of the vessel, if entered with the classification society for hull and machinery, that the date of survey related to each aspect have been complied with in order to maintain class. When was the vessel last surveyed and by whom? Is the vessel registered under the Merchant Shipping Act or by competent authority? Port of registry and registration certificate number. Flag to ascertain if the vessel is registered in a flag of convenience, that is called FOC. So trade related details is also there, like trade the vessel is engaged in and whether as liner or tramp, trading warranties and navigational limits, nature of cargo usually carried, whether single ship, singleton or fleet or part thereof, record of ownership and equality of management, whether the vessel is given on charter and if so, details, whether the vessel is mortgaged for any loan and if so, details and arrears of repayment if any, if laid up in monsoon, place and period. Then insurance related details, conditions of insurance required and the size of deductibles, period of insurance for time policy and details of voyage for a voyage policy, claims experience of last 5 years, premium and claims paid and outstanding statistics, previous insurance history and whether cover was declined at any time by any insurer, whether the vessel is covered against protection and indemnity risk. So the underwriter will also take into account prevailing repair cost and underwriting exigencies or experiences of similar risk. Known losses are published regularly in Lloyd's of London Press and annually by the Institute of London Underwriters. Then there are few supporting documents, like normally along with the proposal form, the details of registration license certificate of the vessel is taken, valuation certificate on hull and machinery and accessories, pre-insurance survey report when required by underwriters, Form B when date is to be fixed by TSE or any other body. Additional queries need to be answered. The vessel is not listed in Lloyd's Register of Shipping. And in case of fishing and sailing vessels, details of arrears of loan, payments to the bank, financier and also confirmation that there is no default. Then valuation of ship for insurance. Of prime importance to the underwriter is the value of the vessel proposed for insurance. A marine hull policy is a valued policy. Therefore, the value declared for cover must be adequate. Underwriters are liable for the cost of repairing particular or general average damage irrespective of the insured or the actual value of the ship, except that the insured value constitutes a maximum for any one casualty. So on the other hand, in the event of total loss of the vessel, the sum insured becomes payable. With this in mind, the underwriter must remember that a low valuation will produce a situation following a major casualty when a constructive total loss would easily be arrived at. So, conversely, when a highly valued modern vessel is involved in a major casualty, it is less likely for a constructive total loss to be possible. However, the cost of repair will result in very heavy particular average claims. Section 29(3) of Marine Insurance Act 1963 says, subject to the provisions of this Act and in the absence of fraud, the value fixed by the policy is as between the insurer and the assured. So, conclusive of the insurable value of the subject intended to be insured, whether the loss be total or partial. So, the normal method is to insure the ship for its current market value. However, in case the ship is mortgaged to the government, it is necessary to insure for the value fixed by the government for the purpose of insurance. And then comes classification of vessels. So the main object of ship classification is to promote safety at sea for life, for ships and their cargoes, and for the environment. Ship classification societies establish standards, guidelines and rules for the design, construction and survey of ships and of other marine structures. So the classification certificate is the document confirming that a ship has been built according to the rules and standards of the relevant classification society and that it has both structural and mechanical fitness for its intended service. Although such classification is not obligatory, it would be impossible to trade without it in the modern world. Certainly, an owner would be unlikely to obtain insurance cover for his ship without meeting such standards. So, like all standards which have to be met, classification requires periodical surveying by shore-based personnel in order to ensure that the ship meets the requirement of the society. Failing to meet these norms or not complying with the recommendations issued by the society may result in the suspension, withdrawal or cancellation of its class. Then there is Indian Register of Shipping, that is called IRS. So this is a classification society established in India in 1975. TSC then agreed to accept hull insurance of vessels up to a value of rupees 10 crores if the vessel is classed with IRS. Discounts were offered on premium for travelers exceeding 100 GRT, tugs exceeding 250 bhp and barges exceeding 500 GRT if classed with IRS. These have changed now. These are pretty old. The services of IRS are also available for the following purposes like damage survey of ships, offshore structures and related equipment and containers, then warranty surveys for marine transportation and installation of offshore structures, and design appraisal, inspection and certification of fixed offshore platform during construction on behalf of underwriters, and survey of damage repairs, preparation of repairs, specifications, evaluation of tender bids, supervision of repairs, endorsement of repairs, bills, etc., whether in India or abroad. As far as rating was concerned, as a guide to determine an appropriate rate for a hull risk, generally following principles need to be taken into account, like management and ownership with their corresponding claim experience, consideration of the type, trade, age, tonnage, all aspects of machinery, whether main, auxiliary or refrigerating, valuation of the vessel, if entered with a classification society for hull and machinery, the dates of survey related to each aspect have been carried out to maintain class, condition of insurance being offered, prevailing repair cost and underwriting experience of similar risk. And then there were certain warranties. Warranties like hull policies are invariably subject to various warranties relating mainly to the use of the vessel. Some warranties frequently used are employment or use of the vessel for a specific trade or trades. The area of operation normally institute warranties worldwide is the widest trading warranty that are available to the ship owner. This warranty prescribes specific restrictions of trading in certain areas and carries of Indian coals. Any breach of these restrictions requires additional premium and prior agreement of insurers. The limit of operational areas, that is flying limits. Flying limit, for example, warranted employed for fishing on east and west coast of India but not to proceed beyond 300 nautical miles into the sea. So registration, licensing, warranty for fishing, sailing vessels, etc. These warranties must be strictly observed. Ocean-going vessels are also subject to the warranty that the vessel is classed and class maintained throughout the currency of the policy. Then there were institute time clauses, and these clauses used to be applied depending upon the requirement of the ship insurance. So this is all about the hull insurance. Thank you.